And so they'll put all that time and effort and energy in, and when the deal's done, they got their check and it's over, and then they got to start over. In general, I'm against that standard. If I have to start over with my earnings, I can't participate. So if I can't build a system out of it, I'm not going to do it.
This video is brought to you by Flipster, the nation's largest property database, including houses on the MLS and off-market leads, like pre-foreclosures and vacant homes. To find your next wholesale or fix and flip deal, start your free trial today at joinflipster.com.
Chris.
Dude, what's up, brother?
Thank you for sitting down. I finally got you on my channel. This
Come
is
on, we
amazing.
finally got you stateside again, right?
I know. Yeah, it's hard when I'm in Puerto Rico, but I've known you for a long time. We were friends when I lived in Utah. We stayed in touch and been able to do business together a little bit. And it's just been amazing for me to be a little bit a part of your journey and to watch your journey. Big fan of your YouTube channel, guys. If you're not, be sure to subscribe. We'll put the link below. Chris, but you are a machine when it comes to putting out content relevant to the market today.
Yeah.
And I want to talk to you about this because, as you know, most of the audience right now that'll be watching this on my channel are in the quick cash flip business. Yep. So it's wholesaling, fix and flip. Primarily, that's what we talk about here. What's great about that is you get these infusions of cash that allow you to then do things. Nothing's better than a padded bank account. But there are some limitations to flipping. I talk about it openly on my channel. You know, I tell people, as soon as you do a deal, you're out of business because it's transactional. Yes. You got to go do another deal, get some more cash. Hopefully you can build systems around that, but you are really big on cash flow.
Yes.
And you're really big on creating these opportunities where that same deal can just continue to make you money rather than one time make you money.
That whole residual component. How does this thing keep moving forward? And the last thing I ever wanted to do was just wake up 10 years later and say, wow, I did 1,000 flips. I made great money along the way. What's your portfolio today? Oh, none.
Yeah.
Right? I don't have those assets.
I got to tell you, Chris, I have, you never look in the rearview mirror in this business, but I look back to when I was first started in Metro Detroit wholesaling houses.
Oh,
that's and now what those houses are worth?
Right.
Yeah, that's the worst thing to do is look back and say, man, what if I would have kept, 1 out of 10 of those flips?
But it's not the worst thing. I actually think it's the best thing. I think it's actually, I live every day asking myself, based on the choices I'm making today, what will I regret in the future?
Yeah.
And I think for me, that's because it's like my greatest fear is regret. Like I hate the idea of thinking that I'm going to wake up down the road and arrive late with recognition that I shoulda, coulda done something different. And so, I don't know, I think I've missed out on a lot of like quick cash deals at times because I've been playing such a long game, right?
It all worked out for me. I'm like, but let's talk about this because you're still very big on holding on to some of these assets, right? Now, it doesn't have to be forever, and I see you still turn some of these assets, but you're monetizing in a way that sometimes can be 10x if you flip it today, right? Yeah. Especially some of your lease options, where you end up still selling that property.
It's so, I think, Jerry, a lot of people, they get stuck in this debate, is it buy and hold or is it flip? And listen, I am assuming I have full permission to be completely transparent with all the ways that I really feel.
We have an editor, so.
Okay, great. So you can edit out this next part. I think that my biggest mistake looking back, speaking of regrets, is that I thought it was one or the other.
Okay.
And for me, I'm an everything guy now. Like if I look at my asset base today, I have a machine that has done over 6,000 single family homes. This last week, we acquired 20 homes. Like we are.
In a week.
Yeah, in a week. We're in major acquisition mode because right now, what are we seeing? The properties are going up like exponentially. Mm-hmm. And because we're missing 5 million homes in the market, and I think some of that number is fake, right? I think that there's a lot of, there's people that need a home and there's people that want a home, but there's at least 2 or 3 million real numbers there. And so if you look at it, it's like, okay, we are not going to experience a downturn until we eat up that inventory. And yet at the exact same time, we can experience a slowdown, but no crash until we actually eat up that inventory. So we are so historically behind at a rate we've never been at before. We haven't been able to catch up still since 2008. If we keep building and building and building at the most aggressive rate, we're still short for 6 or 7 years. Yeah. So what does that supply demand issue do? 2 times a year, you're going to experience kind of a slowdown. It's like, oh, now it takes 2 weeks to get under contract. Mm-hmm. It's not always all cash offers. But really for the next 5-6 years, I think we're going to experience record appreciation. Think about this. In the 70s, the average income was $10,000. the average house was $30,000. Now that house is worth $300,000. There was a quantum leap when hyperinflation hit in the 60s, 70s, and 80s. Where are we sitting right now? We're sitting not at hyperinflation, but we're sitting at really high inflation. We're sitting at 8.5%. We are missing all of these homes. I personally think that between that inflation and what's happened to the price in real estate, I think we're going to see a strong reevaluation in real estate. The national median will go well over $500,000. And you better believe that I'm going to cash in on every bit of that. But the reason why I'm not going to argue on when to hold or when to flip is sure, like I bought a house a year ago and I'm making $70,000, $80,000 on each one of them, just renting them out.
Yeah.
Right? And if you have hundreds of those, that works out pretty good. It's good math. But for me, like if someone says, well, I want cash, this is the part that you might want to edit out. I think that real estate people can sometimes be really short-sighted because all they're thinking is that real estate is the only vehicle. You know, last month I negotiated ownership in over 20 companies. Companies give me way more cash flow
than real estate.
Yeah. And what I like about it is if you set up the business right, or take a really dumb idea like a franchise, everyone can wrap their head around that, right? You got a 91% success rate with a franchise. If I flip a deal and I make $100,000, it's a good feeling. It's a good hit, but it's over, now I gotta do it again. But if I acquire a company that is making $300,000 a year.
With processes and systems in place already.
And my standard is set as absentee owner inside of 4 or 5 months, well, that's a machine that keeps working for me. So if I were to be really heavy in the flipping game, I would have to set up a machine where it would have to run all day long because I want to reclaim my time. My biggest beef in general is not with flipping, it's with the math of it's more of a job than a passive component. So the moment you stop doing the job, you stop getting paid. You do it at a brilliant high level with machines and systems, but a lot of people here, they're the worker. And so they'll put all that time and effort and energy in, and when the deal's done, they got their check and it's over, and then they got to start over. In general, I'm against that standard. If I have to start over with my earnings, I can't participate. So if I can't build a system out of it, I'm not going to do it.
So let me ask you something that's really been changing my mindset around real estate, because I've been a flipping guy for so long.
Yeah.
But I'm looking now at, 20% of sales are from investors, some of this Wall Street, big money. I'm seeing the national home median price go up and up and up. I'm seeing a lot of people be priced out of home ownership.
Yeah.
And I have this fear that in 10 years from now, owning a home will be kind of a hard thing to do for a lot of people.
Yeah.
And so owning real estate will be kind of a special thing. I mean, that's kind of the rest of the world. Not a lot of people own real estate.
It's true.
Is this something where like buying and owning and holding on to real estate might be a really, really smart decision 10 years from now when it becomes even more difficult to own real estate?
So 2 things on that. One is I think we're going to experience a great reevaluation. There's going to have to be a reset. Right? When we finally run out of inventory and all the idiots are still building homes that we don't need, there's going to be a collapse. And that'll be a good thing.
Which will happen because
you can't have a $700,000 average price home for the average person. They can't, even with inflation and the value of their dollars going down, but the opposite's happening in real estate. Like, look at what happens when the Fed just raised points too, right? Now now all of a sudden that those mortgages are a little higher. Someone that could qualify for 300 now can only qualify for 250. That's pushing them in the wrong direction. We are moving towards an eventual reset, which means anyone, I believe, who's participating in real estate heavily for the next 5 or 7 years is going to get in on some of that, like a heat wave of massive profit. And then hopefully you've got a good strategy where you're liquid enough where when the dive happens, and it'll happen overnight. It won't happen slowly. It never does. It's just build, boom, and we have a problem. And then we're going to sit down there, and that's now the best time to buy real estate for the second go around. And so,
are you preparing for that?
Oh yeah, 100%. And I do that because I stay largely under the median. What the median should be, not what the growing median is. Because listen, over the last 65 years, the real estate market on average appreciates 4.65%. That's a 65-year average. I don't have any reason to believe, even with as crazy of things like inflation or with some of the other market forces or what's happening with Putin and Russia and in the Ukraine, I don't think necessarily that that's going to change that 4.65% when everything's adjusted. Which means I'm tracking every year, what would a 4.65% increase be? Not 12%, not 18%. And when we have a reevaluation, my gut is that we are going to drop well below what it should have been, and then it'll come back to what that is, and we're going to experience some
back
level
to the 4.5 where what would be normal.
Yes, adjusted for inflation, so the number is going to be considerably higher because inflation's taking a toll on us right now.
So are you saying that when you evaluate your real estate deals, you're looking at, okay, it's going to go up here because we have this hyperinflation, but when the reset happens, where am I going to land?
Yes.
And that's how I evaluate.
Yeah. So put it this way. Right now, pre-pandemic, our median was kind of knocking on the door of 300,000. It was more like 260, 270.
Not broke 4.
Yeah. Well, so 4.65% should have bumped it up another 10 grand, 4.65%, another 12 grand, 4.65%, another 14 grand. That should put the median right just barely over 3, not 4.
So you're saying that's where it'll reset?
That's what, yes. Adjusted for inflation though, because adjusted for inflation might make that number, our 4 today could end up becoming 7 or 8. And when we reset, it won't reset to the 350. It might reset to 5 or 450 because the value of the dollar has changed.
Yeah.
We haven't seen that dollar shift for 50 years. Like people don't know how to wrap their head around inflation because they're not losing dollars. They're just losing the value of those dollars. And then because of the supply chain problems we have, the dollars aren't equal because in certain sectors like wheat and wood and petroleum and natural gas, it's horrible, right?
But Kris, is your long play though, when let's say that your gut is telling you when the reset happens, this is worth 350, I bought in at 250 or whatever, but when it goes to 7, I'm cashing out? Or I'm going to write it back down to where it should be and just keep going long term?
When I'm going to cash out is largely dependent on when inventory starts running scarce. When we're under 500,000 missing homes that there's demand for, that's when you're going to see me shift and change my strategy, exit certain markets, enter other markets. And I'll be buying through the whole process. But when the reset occurs, I'm going to be so fat with cash. And my whole people, we are going to be ready. And we're going to go in for, I believe, what could end up feeling like post-Great Depression real estate. When people don't have money and fear is at an all-time high and confidence is an all-time low, just like we saw in 2008 during the Great Recession, people thought that it was a horrible time to buy real estate. Turns out it was the best. I mean, I was right there in Phoenix buying up those homes that were selling brand new for 350. I was buying them for 100, 120 grand.
Me too.
And I helped my investors make over $100 million. You know what my number one regret was?
What?
I didn't go heavier.
You didn't buy more?
No, I didn't buy more. So I'm playing the game very, very strategic and different right now, which is why we're ramping up. We're going hard. But we're being really, really careful with these numbers because it's really tempting to get in on some of the bigger numbers and you can make tons of money there. I think we have time for it, right? Development's exciting. There's all sorts of exciting projects. My fear is what happens when you get caught and you didn't have a strategy to know when to pull out. With real estate, with the right math, it's fairly predictable. Stock market, no way.
Yeah.
Right?
You have no control over it. Well, that's really interesting. I love that your analysis is not heavy speculative where you just keep thinking things are going to go and go and go, that you're real about how it can't just keep doing this forever and there has to be a reset. It's just science says once this kind of levels out, we're going to see a reset.
Yeah.
And other factors, maybe interest rates. Well, are you letting interest rates slow you down or stop you? How are you managing that right now?
Dude, 5.5% is great. 6.5% would be great. 7.5% great. 8%. Once we get over 8%, I start having to adjust the plan because right now we're in a cash flow crunch. If you are going to do a buy and hold, we basically had a year where prices were going up. Now we have mortgages going up. Rents haven't scaled. In just the last 30 days, all rents are rapidly re-evaluating with the increased mortgage. So the Fed made some assumptions. They actually planned and they told us that we were going to have 8 bumps over the next 2 years. And immediately mortgage rates increased 2%, not because the Fed's increased them. It's because all of the banks basically assumed that was going to happen. And now the Fed is starting to see how that's impacting the economy. They're looking at inflation like, I don't think we need these bumps like we thought we did. So I don't know if we're even going to see a full expression of that. But listen, I mean, for me, yeah, you're right. Rates are up high. If you're a primary residence buyer, that's important. But if you're an investor, this is math.
It's always about the math.
Yeah. Now, in truth, my cash on cashes, depending on what kind of market I'm in, have ranged from 5 to 12%. And right now they're at like 1 to 5%. And over the next year, you're going to see that even itself back out. But even that makes new investors skittish. Not me. I'm like, are you kidding me? Like those are all the positive indicators we're looking for continued price increases that we want to be a part of.
So Kris, one big question I wanted to ask you, and then I want to talk about your charity, and then we'll wrap up this video. But somebody listening right now we have a lot of new investors working on their first deal that watch the channel. That's why wholesaling is great. It's a good gateway to get into real estate. What would you tell somebody, 2022, they're working on their first deal. They're thinking about, okay, I don't even know what direction I want to go in real estate. what would you tell them to take that leap of faith, take that action, and get into the game?
First of all, real estate is the smartest asset class to be in right now. Your timing is so incredibly perfect. And you need to be playing as hard as you can right now, because the next 5 or 7 years, you're going to feel lucky, because you're going to have ease of growth gains like not in any other slow or normal market. When that market reevaluates, I think we're going to get in on some of the juiciest foreclosures. There's going to be a glut of them in the market, and you're going to get your second opportunity to buy them up at crazy, crazy prices. So real estate probably for the next 15 years is going to be, I think, one of the most important asset classes for you to be in. You need to find a mentor to make sure on your first or second deal you're not doing it stupid. Have a coach, someone watching your six, someone that's looking at your numbers. Sometimes people get so excited to be in real estate that they think that just buying a house means you're in the game. Owning real estate isn't the goal. Owning profitable real estate with a strategy that's working is the goal. Yeah. So I just say, make sure that you're being smart about it and double down. Go harder, go faster. In fact, if you've been watching Jerry for a while and you've been intentioning the last 6 to 8 months, no, it's just a hard market. It's hard to find good deals, but I'm in it. You're not doing enough. You're not playing hard enough. You don't have all the tools and resources you need. You got to check out Jerry and the other resources that are out there to get the help that you need so that you can play it as serious as we are playing the game right now. So 100% be in the game, but don't go it alone if you don't know what you're doing.
And I would say, guys, if you're not, be sure to watch Kris's channel. One of the things I love about your channel, Kris, is you do way more of this than I do, but you dive into the mindset. Yeah. And I know you believe this. I believe this as well. Real estate is more mindset than money or numbers or anything else. And so you talk a lot about how to think in a way that's going to allow you to be successful. Yeah. And when you fix the mental game, it kind of opens up the doors, doesn't it?
Especially if you're an employee versus even an entrepreneur. An employee is bred with the mindset that you're worth a certain amount of money a year and you're worth a 4 to 6% raise a year. And you live, frankly, in crazy amounts of fear and scarcity because you're living on such a tight budget. I don't care whether you make $200,000 a year or $50,000 a year, that's a frame of mind. Guys like Jerry and I, we can hustle for 90 days and deposit $1 million in our bank account. So we don't have to live in that level of scarcity because we have developed ourselves into entrepreneurs that can produce. But that production, that is a different mindset, which means you have to learn how to think different. It's not just, I need to think bigger and think more abundant. Strategically, to play the game at a more intelligent level, I think that my number one asset is not what I know, is how I feel. And so controlling my feelings is actually the most important part of winning in any game of business and finance that I play. And with that, just elevate your standards, right? Make sure that if you're not getting the proper mindset training, that, listen, there's plenty of events out there. There's Tony Robbins, my events. There's all sorts of things out there. You want to surround yourself with people that think differently. And you also want to make sure you're not taking advice from people that aren't getting what you want. Because that's the other mistake of employees is like, well, my family said this, my parents said this, my siblings, my friend, my spouse said this. I'm like, with all due respect, none of those people are qualified to give you financial advice unless you're just trying to get what they got. Yeah. And you're watching Jerry because you know that you need to cut above and you need to think different. So keep consuming content like this and get yourself then in the physical airspace with people like that because and I'll just drop this. Masterminds are, I think, one of the best places to cultivate this because it's like, well, what does it mean to get a mentor? This person's so successful. Do I have to write like a $250,000 check that I don't have to like get one-on-one help? It doesn't always, first of all, cost like, that much money. But a mastermind, I think, is another great approach to mentorship because there's a lot of masterminds out there where you pay $10,000 or $25,000. I get it. Most of us aren't used to investing in ourselves. But when you show up in those venues, it's interesting. I used to join them because I'm looking for deal flow. I'm like, oh yeah, I'm going to work deals. We're going to do deals. You got to make money. The biggest benefit that I got from being in a mastermind was being around people whose mindsets I wanted to adopt. Yeah. And I saw them being successful and happy, or I learned from their mistakes, or I learned what was cutting edge, or what was working.
I remember having a conversation with you in one of the masterminds you're a part of. That's a several $100,000 mastermind. Yeah. And I remember asking you like, hey, what's that value like? And you said to me, Jerry, I'm in a room with people that are playing at such a high level that just being with these people and feeling this energy has elevated me to a whole new level. Yeah. And I see you playing so big in this game and some of the things you're doing. And let's talk about one of them. I mean, everyone right now knows about the war in the Ukraine, and you've decided to take this and really do something huge. Not just a little bit like, hey, let's do something. $1 million is your goal to raise right now.
So our foundation kicked in $250,000 as a match and just said we want to raise $750,000 and in 2 weeks, 3 weeks, first week of June, we're going to Ukraine and we're going to bring $1 million of medical supplies.
And can people listening, can they contribute? Can they,
Yep,
can they help?
100%. If you provide the link, then hopefully they can find us, but it's the Krohn Breakthrough Foundation. And
we'll put the link in the description to do that.
Yeah, so part of what's happening there is my father was a refugee out of Second World War with my grandma, and they experienced something horrendous, all right? She experienced her father and sister executed. They were separated. She was shot twice, left for dead. When the Russian army came in then, 600,000 people died. They had their city destroyed. They lost their country because it became Poland after when previously it was Germany. And, my heart's been touched by the 7 million displaced refugees that are fleeing their country. And the number one need that they have right now is not food and water. It is safety and it's medical aid because the hospitals, the besieged hospitals, don't have the supplies that they need.
So bandages and all
a tourniquet will save lives. Or they have this special blood clotting compound if you get shot that will help cauterize and save your life. So these vital medical supplies, they are not out there. They don't exist. So we're raising the money. We're taking private jet. We're going to bring it over there.
You're going to actually buy the supplies, bring it over there.
I'm bringing them personally myself with about a dozen entrepreneurs. And normally I just write a check, right? I don't get involved like that. And that feels good, but this one is personal. This one.
This means something to you.
Yeah. So I'm just honoring that feeling in my heart that, so if you do see the link and you have a chance to give, know that I'll be, the way my foundation works is I started originally just so that I could gift my money. Cause that's my whole motivation to be, a billionaire 100 times over is just to give. I love the game of redistributing wealth on my terms. Once upon a time I want to get into politics. I'm like, that's a game I don't want to touch. I'm going to make a difference my way. And it's not my way, it's our way because we all work together on these projects. But yeah, that's
amazing. And you are, Kris, touching lives in such a massive way and having such an influence. So thank you for all that you do in the real estate community and outside of it, especially with this cause. Guys, please go to the link. Donate whatever you can. Every little bit is going to matter and help and save lives.
I'm bringing my camera crew at my expense just to document it and show it and then share it with the world because that won't be our first mission. We're going to go back. We're tackling child sex slavery right now. The traffic rings have sprung up at the border big time. So we're working with one foundation there. We are doing the medical supplies. We're helping orphanages. I just can't imagine what it would be like. This is the largest humanitarian crisis since the Second World War. And imperialism somehow reared its ugly head again, but we have a chance to do something about it. And we're going to.
Yeah, and you can be a part of that. So thank you. Kris, love the things that you shared today, guys. I hope you really take this to heart. I think the biggest thing I took, Kris, was don't wait, right? Get in now.
Yes.
Don't worry about some of these things that are happening because there's ways now to just manage some of these things like interest rates or whatever it is.
Yes.
Now is the time to do this and really make a difference and change your life like you have done. And so thank you. Guys, if you haven't, be sure to subscribe to the channel and we'll see you on the next video.